Traders, listen up. The market just sent us a message today, loud and clear. Whether you caught it or missed it, this is your edge going into Monday. Let's break it all down. S&P movers, Fed vibes, technical setups, and my personal playbook for the next session. What a ride we had today, Friday, April 25, 2025. The S&P 500 slipped just under 0.3%, closing at 5,107, while the Dow Jones dropped 110 points, dragged down mostly by energy and consumer staples. Meanwhile, the Nasdaq managed to squeak out a green close, up 0.4%, powered by big tech yet again. The theme? Rotation. Traders are shifting money from defensive plays into growth, especially AI, chips, and high beta names. And that tells us something heading into the final week of April. Let's talk key movers. Meta popped plus 3.8%, still riding momentum from its latest earnings beat. That stock broke over $340 today. That's a key breakout level it hadn't touched since late 23. Nvidia closed at $922, hitting all-time highs. Yeah, again. That chip rally is not done, folks. Volume is telling the story. On the flip side, Procter & Gamble, PG, dropped 2.2% after weaker-than-expected consumer demand data. Staples are looking shaky. In the Dow, Goldman Sachs, GS, was under pressure, down nearly 2% on soft bond desk numbers and tightening credit outlooks. Now, here's the curveball. The University of Michigan's Consumer Sentiment Index came in at 76.8, down from 79.4, showing folks are feeling a bit cautious. Inflation expectations ticked slightly higher. Not a game changer, but it feeds into the Fed's cautious stance. Speaking of which, Fed Governor Michelle Bowman dropped a Friday comment saying, "We need more data before easing." Translation. Rate cuts this summer aren't locked in yet, and the market's starting to price that in. Fed funds futures. They're now giving a 42% chance of a June cut, down from 58% just a week ago. Let's talk levels. If you trade off charts, take notes. S&P 500, key support is at 5,060, that's the 20-day EMA. A clean break under that could open up 4,980 real fast. Nasdaq 100 is holding strong above 18,000, but there's resistance around 18,240. If it breaks that on volume Monday, momentum traders could have a field day. VIX closed at 13.2, low volatility, but keep an eye. One bad data point and that thing spikes. By sector, tech led the pack, up 1.1%, with semis and cloud outperforming. Energy lagged, crude pulled back below $81, hitting names like Chevron and Halliburton hard. Unusual volume. Palantir, PLTR, saw 3x average volume, with 0 headlines. That usually means someone knows something, not saying buy, just watch list it. Here's my take, we're in a tight range, but tech's leadership is real, and the market's telling us it still believes in growth. But don't get too comfy. Monday could bring follow-through or fake-outs, especially if any geopolitical headlines or surprise earnings drop. Personally, I'm watching the Nasdaq 100 breakout for momentum trades and S&P's 5,060 level as the line in the sand. If we lose that, I'm shifting to defense. If this breakdown gave you some clarity, do me a favor, hit that like button, subscribe, and drop a comment below. What's your game plan heading into Monday? I read every one and reply when I can. I'll see you right back here after the next close. Until then, stay sharp and trade smart.